In my opinion, there are three criteria that define an investable creator brand. To put it very simply, it's the big fish in a small pond strategy, it's a scalable value strategy, or it's a strategy around mastering the needs of your audience. Starting with a big fish in a small pond, it's a very straightforward strategy. Think of it in the following way. You can be the Mr. Beast of the creator world and go after millions and millions of audience, but there's a lot harder to go and find transitional value within that audience that you can then go take VC's money, invest, and expand it. It's much easier to do it when you're in a very specific niche. You cover a very specific type of content, and you can go and kind of like expand based on the value of the content that you provide to that niche because you already developed enough reputation and you became that big fish in a small pond. You have the reputation, you have the respect of that audience, and they will follow your lead if you're going to promote to them your own product or services because they trust you as a brand. When it comes to the scalable value criteria, scalable value can go together with a big fish in a small pond strategy, but also on its own. It can be an opportunity to say, as a creator, you understand the kind of value you provide. Your audience respects you and they really go after your content and any kind of like maybe additional small auxiliary things that you do today to go and deliver this value. But adding VC investment into that environment will essentially just blow up the business and it will allow you to create more, serve bigger portion of your audience compared to what you're doing today. Maybe will open the doors to the opportunities that you cannot invest today and expand on your own. Essentially, you're like pouring gasoline on the fire that you masterfully crafted and created over the past, like say, 10 years, and now you're just pouring the gasoline in front of the VC money to just blow it up into the proper large campfire. Odd metaphor, but I hope you're tracking what I'm saying. The whole idea is that VCs are looking for ways by which they can join someone else's business, someone else's enterprise, and expand it. You can show those signs, the early kind of like signs of the potential to grow based on the fact that maybe you have an untapped interest in the audience, maybe the kind of things that you're doing today do not satisfy the full demand of that sector, or maybe there's some interesting opportunities that you have in your mind but you don't necessarily can execute on them because again, you don't have enough funding, and that's where the VCs come in. And finally, the mastery of their needs, again, very much ties with the other two. In the ideal state, VC will love you if you can hit all those three. But just that third point alone can be very interesting and attractive for the venture capital because if you master their needs, if you really have a very tight understanding of what your audience needs and the kind of things that they're searching for when it comes to not only your content, but just the value that they're seeking out of your content, you then taking that to the next level and using the investment to expand and address that interest that needs from the audience more consistently will make you a very attractable investment for venture capital. Logic is very simple. A lot of companies think that they understand what their audience needs. A lot of product producers, people who understand certain individual problem, they create like a software or a physical product to address that problem. They think they understand their audience, but usually they just understand a very narrow scope of that specific need. Someone who's been creating content for the past 10 years, again, as an example, someone who's been talking to the audience, maybe you've had a lot of encounters in person, maybe you've run a lot of live events and you kind of like have conversations there, maybe you're just a streamer and you consistently talk to your audience in the chat, you will have such a strong sense for their needs and what they're seeking above and beyond what any marketing company can achieve by just running a few focus group and a few research products. So from that perspective alone, you can be a very attractive investment. And if you combine those three, you will become pretty much the best creme de la crop kind of opportunity for venture capital to come in and help you, again, may help you maybe make you a bigger fish in that already small pond, or maybe help you expand to a couple of different ponds. Maybe they'll help you just expand on the value that you're delivering by again pouring the gasoline over that fire, or they will actually go and help you take it to the next level because you already understand and you have the mastery of the needs of that audience, and now they'll help you understand, okay, how can we create additional value and also monetize it by maybe providing additional products, services, live events, consulting services, or whatever else might be applicable to your niche. And if you feel like you hit one, two, or all three of those criteria, the important consideration you always have to keep in mind, and it's something comes back to My frequent reiterated point about you always need to understand what drives the behavior of other individuals who you're partnering with. In case of venture capitalists, what drives their behavior is an opportunity to exit at enough of multiples to satisfy the needs of their clientele, who they're investors, their limited partners. And from that perspective, I want you just to keep in mind these three strategic pillars. This is from a separate conversation about potentially selling your company as a creator, but I think it's an important factor to bring up here because once you hit those values, you become attractive from the perspective of what you can provide to the viewer, right, to your audience. This makes you a little bit more attractive from the perspective of, okay, that secondary criteria in decision making, specifically for the venture capitalists, because they need to understand, hey, can I extract enough value from this business in the future? When I was talking about the acquisition strategy here in one of my prior videos, I mentioned 3 to 5x future growth. In my opinion, for the venture capital, really ideally, they would want to see 10x of that. So whatever they input as a value, say $1 million today, they ideally would want to see at least 10 million in return in the next 5-7 years. Predictable model is a very important part of it because they want to make sure whatever you embark on as a project, as a creator, with the help of the investment from the venture capital, you can consistently deliver the returns, right? It's not just like flash in the pan. Hey, there's a sale, there's this drop, and then it's quiet for months and months and months. Very few businesses can work off of that and especially become highly valuable. They want to see something that's a lot more predictable, that has some cadences to it, that has something that you can continuously review, report on, and confirm that it is working, it's trending in the right direction, and it's growing at the right pace. And it's independent. Importance of the independence is that ideally, in the future, someone goes and acquires, for example, that brand that you created together. Or maybe you go and take on even a bigger funding from a bigger brand or a private equity shop, whoever else that might be. All of them will be looking for a single thing, is that that brand is really can function independently of the creator in front of the camera. Too many brands, and we're going to talk about one in a second, require creator constantly being in front of the camera promoting that brand in order for any sales to happen in a predictable way so that they can achieve that X, 10x, 5x scale. If your brand has that, it becomes very attractive and immediately de-risks that key person risk, what they call it. But if your brand heavily depends on you being constantly in front of the camera, that's one of those challenges that you're going to have to overcome, whether it's by yourself or together with the venture capital, to ensure that as the business grows, as they continue to invest more money, as you together with that venture capitalist or maybe any other investor continue to expand the value that that business offers, it becomes less and less dependent on the creator being always in the public eye. That's kind of like perfect bullseye idea of the kind of brand and the business the venture capitalists would want to invest in so that they can gain those returns. And to drive this point home, I want to present to you two creator brands that I think kind of like fall on two different sides of that spectrum, right? From the spectrum of, are they big fish in a small pond? Do they provide the right value? Does the person understand the value that their audience seeks? Absolutely yes, yes, and yes for both of these businesses, right? They actually hit those marks on both ends. But do they have an opportunity to scale 3, 5, 10x? Do they have an opportunity to be a sustainable business? Do they grow and expand without continuous presence of the creator in front of the camera? The answer is yes, only for one of these two. So you can guess as I talk through them, but I think we'll pretty quickly and evidently identify which business is which. One of them is by one of my favorite creators, Peter McKinnon. So it's Pete's Pirate Life. Essentially, the whole idea is that they create all sorts of things, from coins to golden keys to knives, to different sorts of collectibles. And you can see there's some t-shirts, lapel pins, trucker hats, coin displays. If you go and look behind me, I don't know if specifically in the frame, but there's plenty of things on this shelf from this brand, from the perspective of whether it's knives, coins, or otherwise some interesting small collectibles. Not going to pull them off the shelf right now, but you get my point. Very interesting, very unique, something that really resonates with Peter McKinnon's audience. The other brand is Epic Gardening. Epic Gardening, if you've never seen them before, it's essentially just as the word would describe, as the name would describe, it's a channel about gardening and all the gardening needs, techniques, seeds, different types of tools that you can use. And what they've done, they have their own kind of like storefront, and as you can see, they sell seeds for specific type of fruits and vegetables and mushrooms. But they also acquired Botanical Interest, which is a like 30-40-year-old store that sells seeds with several different physical locations. So it's a brick and mortar kind of like enterprise, and they kind of like sell, and now you can see there's all homogeneity between the websites. They kind of like made them look very similar. I'm pretty sure you use the same kind of like fulfillment centers for both. So between the two, which one do you think is more investable? I think it's pretty self-explanatory, and I on purpose picked very explicit examples. I promise in the future it's not going to be that easy. But from the perspective of, if you start thinking, right, again, about this whole idea of the exit strategy, which one can grow, which one is predictable, and which one does not require constant presence by that creator in front of the camera, clearly this is epic gardening, right? From their perspective, once someone is in this hobby and someone really trusts their brand, they don't really need to see the entire team in front of the camera consistently, right? They can just be there, provide the content, provide certain tutorials, refer back once in a while back to the website. But traditionally, in this kind of businesses, as a viewer, as a consumer, once you kind of like know and you trust, like, hey, I know that they can provide me with quality tools, quality seeds, there's going to be some quality other, whatever compost, I don't know, I'm not into gardening, but whatever other things that the gardeners are into. If I know I can trust this store and they're going to provide those products consistently, they have high quality, they have a great support, I'm just going to keep buying from them. I don't need necessarily to go and continuously watch the videos, because I just know, like, hey, I want to try this seed versus the other seed, or things of that nature. Maybe some techniques and videos will inspire you to do other things, but you don't have to have them. Where with Peter McKinnon's brand, Pete's Pirate Life, as much as like love, again, he's one of my most, I think, viewed creative, and one of those individuals who inspired me at the end of the day to be myself in front of the camera and make content. He's primarily focused on like cinematographic, kind of like vibes-based content. He talks a lot about quality of photography. He has a lot of interesting partnerships. The guy does amazing things. I really love his craft, and he's one of those masters at it. Watching his videos are a joy, amazing personality, and the brand is fun. That's why I have a bunch of things here, because I also I enjoy knives. I enjoy this one, like small collectibles like coins. It's just cute. It's fun, right? It's something you can talk about, something put on the shelf, or let your kids kind of run around with it if it's not too expensive or sharp. But from that perspective, you cannot necessarily take it too far. Like, let's talk a little bit about 3 to 5 to maybe 10x growth. With Epic Gardening, you can see the opportunity to open more stores. You can see the opportunity to go international. You can see an opportunity to expand in other maybe subcategories of products and tools that they don't sell today. With Pete's Pirate Life, you cannot necessarily do that. There are only so many avenues you can expand. Maybe you go and focus on a single one. Maybe it's like knives, and you become the Benchmade, right? One of those big knife producers, and you become that next big brand, big name in the knife production, right? Maybe the avenue, but it's not necessarily something he does, and it's not necessarily what his content is about. His content is more about the lifestyle and the style, and that's how those pieces fit into it, because it's all about like everyday carry, things of that nature, right? So it fits on a one-off basis, but once you start really digging deep, it might actually create a dissonance versus the kind of content he creates. Is it consistent in terms of the revenue? Epic Gardening, absolutely, right? You have your consistent sales in seeds and tools. People plant plants at certain times of the year every year, so they'll probably stock up on seeds ahead of them, right? There's certain events, there's certain things that are happening in the nature that you need to adjust and kind of go for, and so you're going to go buy more products, and it's pretty cyclical, hopefully, because that's an important part of being a gardener, right? Like that cyclical nature of what you create. With Pete's Pirate Life, only recently you see the storefront and there's actually consistently stock for certain products. In the past, it was always just drops only. So every couple of months, every few weeks or so, there'll be a drop. The drop happens. There's like a few hundred units behind that drop, and then it's gone and we're off to the races. So there wasn't necessarily any consistency to it. And that lack of consistency is something will not necessarily seem interesting or investable enough for a VC who looks for an exit. And finally, is it independent? Epic Gardening, absolutely. I know about the channel, I know about the storefront, I know about their history and all of the things that they're doing. I still cannot memorize the name of the main face of their channel. Great guy, I watch his content, I made a whole dedicated video once about them. Blanking, like I'm not trying to pretend, like I'm just genuinely blanking on his name, right? Like that's how unimportant, with all due respect, his name and his presence is for the success of this brand, which is awesome. That's great news for the venture capital investment. Pete's Pirate Life, name aside, which is already right there, Peter McKinnon, like I cannot detangle those two together, right? If Peter is not making content or talks enough about some of these drops, usually in this case, he does it on his Instagram. If he doesn't post on Instagram about the upcoming drops, if he doesn't talk about it in some of the videos, he doesn't show some of these tools, some of these knives, some things that he does in his videos, After like 3 to 6 months, I doubt people will be proactively checking. Maybe once in a while, you'll like look at the shelf and you'll see one of his units and be like, yeah, what happened to that brand? And you're going to go and click on the website, open it, and kind of just like check out what they're selling, but you're not going to do it proactively, right? And this is why when you start thinking about and you come back to the idea that there are two perspectives that I want you to leave with, right? There's this perspective from you kind of like defining yourself as an investable business, as a creator for the venture capitalist investment, like, and trying to hit some of these three criterias. But there's a whole separate conversation about what actually is interesting for the venture capital for them to potentially exit that business in the future, right? Many of them will come back and they'll tell you like, hey, we're here for the growth, we're here because we're passionate about this. And sure, that absolutely can be true, but ultimately they have a job. Investors, especially venture capital, they have a job, they have LPs, limited partners who actually invest the money and deploy the capital, and they have certain expectations to see that capital come back, especially if they're representing more institutional investors, right? Like pension funds, maybe some sort of mutual funds, family offices that pull together a bunch of funds from high net worth individuals. They're not doing like non-for-profit work. They're not running a charity. They have certain financial goals, right? They know that they need to achieve 10, whatever, 6, 8, whatever the number might be, percent annual return on the investment for their client. And when they deploy the capital, they look at the portfolio of different investments. And it can not only be just a single VC shop, they'll invest in multiple different shops, multiple different people who they trust, a few million here, a few million there, with the expectation that across the board, maybe some of them will fail, but across the board, they will succeed and they'll give them that average return that they expect that they can then deliver to their investor. That's from the perspective of the LPs, right? So from the perspective of venture capital, they want to be the good, kind of like, green area of that portfolio for the LP, for the limited partners. So they would want to make sure they're successful. So when they deploy the capital, as much as they can be passionate about the creator, as much as they're passionate about the business that they're investing in, at the end of the day, it all comes down, can they extract the value back, make the money, and return them to the investors, and hopefully pocket some of the difference and whatever the percentage contractually that they keep, so that they can keep their venture capital business going. So from that perspective, don't take it personal. If you look across your business opportunity, if you think like, hey, I'm worth these millions of dollars and I'm worth the investment, but people are not really biting, just think through those criteria, right? Like really understand and define yourself, but also go and understand and put yourself in the shoes of the venture capitalists, understand that they have a job and there's a criteria for the success for them personally, and that them not willing to invest in your business might just mean that, hey, your business is great, but it's more suited for independent execution. Maybe you're even better off going and taking out a loan if you have a predictable cash flow that you can cover the interest payments, or maybe there's some other ways by like friends and family rounds of funding that you can run without having to take on a massive partnership with someone like, say, Slow Ventures, right? Or Creative Juice, or Mythical has their own fund, right? Like there are many different opportunities and venues for you to go and explode kind of like the growth of your brand without necessarily partnering with massive venture capital companies, right? Who dedicated to that specific type of business. So I hope it was useful. If you have any doubts, you have any concerns, if you're trying to decide like, hey, am I in the right position? Like I kind of listened to you, I saw all these criteria, but I still have some questions, drop them in the comment section below, or feel free to reach out. Again, I talk about this stuff for free in the content, but I also schedule calls and I talk to folks for free about it because, again, I enjoy even discovering, and I know pipeline generation for the venture capital investment, especially in the creator economy, is a tough challenge. That's something I've discussed with Slow Venture team multiple times. So if you're interested and if you think that you're someone who can be suited for that, but you're not quite sure, and you want someone to give you their personal and kind of like independent opinion, hit me up. I'm on the socials with all the same moniker, TohirT, so you can just reach out. We can chat. I can give you my personal feedback and opinion from my experience working in the VC and private equity to now for the past 8 years of analyzing creator economy and being in the creator economy as a creator myself, talking about the business of being a creator. So it's a fun environment. I really enjoy it. So hit me up directly in the comment section. Looking forward to chatting with you, and we will continue this ball rolling. This is like video 3 of the series of videos that I make about the investable businesses, partnering with VCs, with private equity. So let me know also if you have any kind of questions that you would want me covering in the future videos. Otherwise, I'll see you next Saturday. Peace.